In this video, I will show you a step-by-step strategy that will allow you to choose the best stocks to invest in. Stay until the end of the video because we will see some real-life example of stocks which are very interesting for an investment right now. Let's start with an example that gave us such a great satisfaction in the past week.
Here, of course, we can have a look to the incredible performance that NVIDIA had in the last few weeks and of course in the last years, because talking about performance, NVIDIA had an incredibly 51,000% of performance in the last 20 years, which is something really, really crazy, better even than Apple, which is incredible. Okay, here on the forecaster you can also have a look to the year's performance, so you find every single year with every single performance for that year. Okay, but let's move to the fundamental page because it's very, very interesting, and let's start talking about the sector. First thing first to do when we try to analyze a stock is understanding the sector, is understanding the industry where the company is moving, where the company is operating. And of course, in the case of NVIDIA, it's very simple to understand because they create the GPU. We made a webinar last week or 2 weeks ago, I don't remember, regarding especially on NVIDIA. And when we analyze, okay, an industry, it is important to try to assess future prospect of the industry, of the sector. Okay, so in the case of NVIDIA, we don't have nothing to say because we are talking about artificial intelligence, which is the new internet, which is the new revolution. Everybody knows that artificial intelligence will shape the world as we know. So of course we have very good perspective for this sector, for the GPU and computing power sector. So the sector is good. I mean, we are not in fossil fuel sector. We are in a sector which is really growing and probably will shape the future, will shape the world as we know it. Okay, so sector, analyze the sector and understand if we have future prospect, and this is the case of NVIDIA. We go to the fundamental page and let's have a look to the fundamental data, to the financial data. And also in this case, we can see that the sales and the net income are growing. And this is something really interesting because we have to search for this type of sales and net income when we are looking for a company to invest in. Okay, it's very important because guys, stocks grow up in the stock market only for two reasons. The first, the stock of a given company grow if the company have good results in terms of sales and net income. Okay, on the other hand, company grow on the stock market if they have futures prospect, a really high future prospect. Okay, in case of NVIDIA, we have both because NVIDIA is doing really well in terms of sales and net income, but NVIDIA has also a very beautiful, a very bright future perspective. Okay, for example, if we talk about Tesla, Tesla, especially many years ago, the company was only having a very bright future, very bright perspective, because Elon Musk, in case of Tesla, was a really good marketing manager, because he was always able to create hype behind the company, and he was really able to convince investors that Tesla was not only a car producer, but also a company that in the future will change the world of transport as we know it, okay? So company and stocks on the stock market grow if they do good results in terms of sales and net income, and if they have good perspective, okay? If analysts think that the company will do money in the future, okay? In this case, we have both, so this is really good because we have perspective and we also have sales right now with a very good income. But this is not enough. We don't have only to watch sales and net income. We have to watch deeper inside this number, and we have to understand the quality of these sales and this net income. How can we do? Very easily, we can click on ratio here, and as you can see, we have for the same years, for the same balance sheet, we have the profit margin, the ROE, and the debt equity. Profit margin, very simple, is the profit we have on the margin. Is the margin we have on the profit. It means, for example, that in this case, in 2023, Nvidia with the 15% of profit margin, it means that revenues less cost, at the end of the day, it has a 15% of margin, okay? ROE, very important. It's a ratio which stands for return on equity. It means how much the shareholders, how much the investor get as a return on their capital, okay? Return on equity. Return on equity. Equity is the capital, the money of shareholders, of investors, okay? And very important, debt equity. Debt equity is a ratio which tells us how much debt has the company compared to the money that investors put it on the company itself. So in the case of 0.48, like in 2023, it means that the company has more money by itself than the money it took by debt, okay? If debt equity is more than 1, it means that the company has got more money coming from the debt, which is not always something bad, okay? Because in an environment where interest rates are very low, it's something good because you can get money from outside at a very low interest rate. But of course, things change, and this an high leverage, we can say, an high amount of debt could be really dangerous when interest rates rising, which is something that just happened in the recent month, okay? What is very important regarding the ratio is to analyze, first of all, the trend. And like in the case of Nvidia, we can see something really interesting. Look, in the last year, in the last balance sheet, in the last statement, we can see that both the margin and the ROE skyrocketed. It's something that is incredible, because the company grew a lot in the last year in terms of sales, because it passed from 26 billions of sales to 60 billions of sales. And this is incredible what happened. Also, margin and profitability skyrocketed, which is something really strange for a company of this dimension, because Nvidia became so huge, and it never happened in the history that someone became so profitable even with this kind of growing. At the moment, we have first step of our strategy, the sector, and for Nvidia was really okay when we decided to invest in. Second step, rising sales and income, and of course we have for Nvidia. Let's go deeper. Ratios, in order to understand if the quality of sales are good. And of course, we had it for Nvidia also in the past and even today, okay? Let's move down in the page and let's see what Altman Z-score, Piotrowski score, and Benish score was telling us about the company. And of course, as we saw in the previous webinar, we have a solid company. If you would like to, if you didn't see the video regarding Nvidia, I can share it to you. You can find it on our YouTube channel. Please see it, because it was it's a very good it was a very good webinar. Okay, you can see the recorded version on our YouTube channel. Okay, and that's it, guys. Once we found a good company in a good sector with good fundamentals, okay, we have to move to the overbought and oversold page. In this case, what we are looking in this page, in this specific page, is a specific moment when we can just understand that the stock price is ready to skyrocket. And look, in this case, what we can find. We were in October, okay? We had a little downward trend on Nvidia, okay? But look what happened in this last leg for prices. Look, we had our Wyckoff causes effect indicator, which was telling us a different story, because look, we had prices, we can say sideways / downward trend, and the Wyckoff indicator, which tell us if the demand or the supply on any given instrument is winning or losing, okay? In this case, while the price of Nvidia was going down, the demand was rising, okay? It means that all this area was an accumulating area, and the stock was ready for jump, was ready for skyrocketing. If we go exactly, if you would like to see exactly the timing, here, look, we have a lower low compared to the previous one, okay, with our indicator, which started weeks before to do higher high and higher lows, okay? So here we find a very strong divergence, between price and oscillator. The oscillator is telling us that the supply was winning, the supply on the demand on the stock was rising, but the prices made a new low. This is a very strong moment. This is a very interesting moment to get inside the stock, because probably when we are in front of an undervalued company and we find a specific moment like this one, it means something is gonna happen. Okay, so how can we exactly decide the moment of getting, how we got inside the stock, how we got inside Nvidia exactly in this moment? Okay, let's go to seasonality, and I would like to show you something, because look, if we add also the 10-year seasonality and the 15-year seasonality, but also the 20-year seasonality, look what we can see. Exactly October is a perfect moment to get in, because look, seasonality in the last 5, 10, 15, and 20 years tell us that exactly in this period, Nvidia stock tend to do a low, a very important low. Okay, so as you can see, we have all the pieces of the puzzle, let's say, because we have an undervalued company, we have an overbought, we have the Wyckoff indicators that tell us that this is a very interesting moment to get inside, and we have also the seasonality, which tell us that from September to October we have such an interesting point where Nvidia tend to sign a low.
Another example of a stock that gave us great satisfaction is LVMH, Louis Vuitton. Let's start by analyzing the sector.
And we are talking about a company which aggregate many luxury brand. Okay, we have of course Louis Vuitton, Loro Piana, which is a very important brand for dress. We have Moet Chandon. We have many important brands. Okay, in my opinion, luxury is a sector that will never lose hype. Okay, so in my opinion, in the long run, luxury is something that will always work. Okay, so let's move down to the fundamental page, and here we can find the same situation of Nvidia. We can find a growing company, rising sales, rising net income. Okay, so we find a very interesting company. Okay, let's get deeper. Let's go and have a look to the ratios. Look, very good margin, 25%, very good ROE, 24%. Very good debt equity, 0.18. It means they have much more money than the money they get from credit. Okay, very interesting situation. And of course, look, we have a company which is undervalued, 36% undervalued, below the fair value at the moment. I missed something regarding Nvidia. We have to go back, because of course now the company is a little bit overvalued, but look, the fair value is 800 dollars. Okay, but the day we had the long entry, the long signal entry, it was $405. So it means it was half of what is pricing today. Let's go back to LVMH. Here we are. As I told you, good trend in sales and net income, very powerful and very good ratio. Profitability is very high. ROE, return on equity, is very high. Shareholders are very happy to put money in this company because they get back so much money. They are very well remunerated. Debt equity 0.18, low debt, no risk, low volatility, perfect. And we still have an undervalued company, even if in the last week the company went up a lot, okay? So the first step of our strategy, perfect. We have a really interesting company. Let's move to solidity. Altman Z score is growing. It means the company has a very low risk of bankruptcy. Piotrowski score, very high, 8 point. And Benisham score, also in the green area. This company is unlike to be manipulating its earning. Very, very nice. So why we got inside the stock, why we bought the stock a few weeks ago? Because look, as I told you, for NVIDIA, we had such a very interesting situation here. Look, we had a downward trend with a very interesting minimum. This was already a good point for entry. But look, we had a second opportunity here. We also had a very strong divergence between prices, which made a lower low compared to the previous one. Look, we had a lower low with a divergence on our Wyckoff indicator. It means that even if the prices fell down and created a lower low, here we have such a strong buying power. Here we have the effort from investors that they were buying. Big boys were buying here. Look, the demand for this company, for these shares, were growing. And this is why we bought here the company. On the new low, we went long on the company. And look, this is not the only reason, because if we move to seasonality and we put also the 10-year and the 15 years, as you can see, they are very similar because seasonality really works on stocks. Look what we can find here. Look, October. Let's refresh the page so we can see better. 10-year, 15-year. As I told you before, we were in October. We had a lower low in October. Look, seasonality say that a minimum in October is a very good moment to buy these stocks, historically speaking. Okay? So what do we have to do? We had an undervalued stock, okay, with the strong fundamentals, an oversold situation, very interesting, where the Wyckoff indicator told us that this was a fake low, and seasonality telling us that October was a very strong moment to get inside the company. Okay? Yes, of course, Stuart, this webinar will be available starting from tomorrow on our YouTube channel, and I invite you to visit our YouTube channel because you can find many webinars regarding the Forecaster terminal.
Since now we saw some examples that worked in the past, so let's move to some examples that are happening right now. Let's start to apply our step-by-step strategy with Adobe.
Very interesting sector, okay? Adobe is a diversified software company, okay? It operates in three segments: digital media, digital experience, publishing and advertising. I don't know if you are familiar with Adobe, but it's a company like no other in the world of, for example, making videos, okay? I do videos, I work with video, and look, I have Adobe Premiere, which is the state-of-the-art software to create videos, okay? Everybody, all the video makers around the world use Adobe, okay? It's like saying Coca-Cola. It's like say Apple for phones. It's like, I don't know, you name it, but I mean, it's a leader. Talking about the sector, very good, perfect. So let's move to the fundamental. Look at the numbers. Sales and net income rising, growing year by year. Very, very interesting. This is a very good sign for this company, okay? Let's go deeper. Let's see the ratios. Profit margin, very good, 35%. ROE, 32%, very good. Debt equity, 0.24. Debt is under control, which is a good idea, which is a good news. We also have an undervalued company by 14-15% with a fair value which is a current price which is below the fair value. Very interesting. So we have an undervalued company, okay? Let's look deeper. The solidity, Altman Z-score, very good. Low risk of bankruptcy, sorry. Piotrowski score, 9, maximum level for Piotrowski score. Can't do better, guys. Benny Shem score, this company is unlikely to be manipulated its earnings. Perfect, perfect, okay? And look, we have something very interesting watching the insider transaction page. Here we have someone who is Ben's Emmy, one of the director of the company, which is purchasing a huge amount of shares. And this is a very good sign because, as I told you many times, we don't know why directors of a company sell stocks. Maybe they have to change the kitchen, I don't know, and they need money. But when a director purchases stock, it means she, in this case, would like to make money, okay? So this is a very good sign because they have the real number. They know how the company is doing for real. This is a very good sign. Perfect. So let's go to overbought oversold. And look, here we have a very interesting situation, guys. Why? Because we have a company, we have a share price which is going down. Look, we have a new low here, but look, the Wyckoff indicator is not making new lows, is not making lower lows. It means that the demand for this company is growing. And as you can see, look, we can also see this demand, this growing demand from the volume, okay? So we have the same situation we had on NVIDIA, the same situation we had on LVMH. Very interesting situation, okay? How can we decide if it's time to buy the company or to wait? We have to move to the seasonality page, and Look where we are with Adobe. Let's put also the 10-year seasonality and the 20-year seasonality. And look, we are very close to a turning point. And if we highlight this part of the chart and we scroll down the page, we can see all the trade statistics. And we can understand that both in the last 5, 10, and 20 years, buying the shares of this company in this specific period was a really good idea, because we had an average return of 53% in the last 5 years, 35 in the last 10, 32 in the last 20. What are we talking about? This is a very good company. And look, in 7 days, we will have the next earnings. If we go to the fundamental page and we click on this button, next earning added to your calendar. Now we have earnings of Adobe in our calendar. Look, if we go to the calendar page and we go to the 14, here we have Adobe next earnings. So we will not lose the news. Let's see another example of a very interesting stock that we just bought, which is Johnson & Johnson. Very interesting sector. We already talked about this sector, which is the healthcare sector. Why a very interesting sector? Because sooner or later everybody needs medicine, but AI is ready to be a game changer in healthcare sector. And Johnson & Johnson is working with artificial intelligence in order to advancing drug discovery, helping treatments reach patients faster. Artificial intelligence, we know, will shape the world, but probably it will start to shape the world starting from healthcare. Okay, regarding the sector, perfect. We have a huge sector, which is the healthcare sector, which probably will be revolutionized by artificial intelligence. Nice, good prospect for the future. Here, what about numbers? Let's have a look. Sales and net income. Last year went a little bit down, but it's a good company. It's growing in the long run. Let's go deeper. Let's have a look to the ratio. They are a little bit going down, but we still have a 17% profit margin, a 20% ROE, a very strong debt equity, 0.38, not too much debt, which is a good news. And regarding the valuation, we have an undervalued company with a current price of 158, which is 12% below the fair value. Okay, very interesting. Let's talk about solidity. Altman Z-score, very strong. Low risk of bankruptcy. Piotrowski score, number 7, right, easy, it's okay. This stock is to be considered strong. And Benisham score, no risk of manipulating its earning. Nice. We have a good company here, guys. So let's move to the overbought and oversold page, and let's have a look. What is happening here? Look, something really, really interesting. I show you this chart, because look, the demand on this stock is rising. All the last year prices went down, but the demand is growing. Really, it's very interesting. The demand for this stock is growing. Big guys are purchasing these shares. Look, very, very nice. Look, this new low, This is a very important law, and it was made with a Wyckoff indicator that made a higher low. Look, higher low, lower low. This was a major entry point for this stock. But don't worry, because we are in a very good moment too now, right now. And let's see if, timing speaking, it's the right moment to get in. And look the seasonality. We can expect just a downward leg until the next few weeks, but then we have rising prices, so we should be near to an important turning point. Okay, very nice. Something I would like to show you, very important when we talk about a stock, is dividend. If, remember, very important, if we find a stock which is going down, but at the same time we have an history of increasing dividend, like in the case of Johnson & Johnson, this is one of the strongest signs that this stock will skyrocket in the future. And of course, just talking about something already past, already happened, if we talk about LVMH and we go to the overview page, we can see all the history of dividend, and look, dividend is going up even if the prices was going down until few weeks ago. This is one of the best, the strongest signal we have that a company will do good on the stock market, because rising dividend is a sign of a strong company. So when we find, like for LVMH, like for Johnson & Johnson, as I showed you before, when we find a company with a growing dividend history and the stock prices which is falling, it's a sign that probably this company will skyrocket in the future, especially if the company is undervalued, fundamentally speaking.